Hey everyone, welcome back to the channel. Today we're going to talk about how to get paid to live abroad. I know that's a little bit of a catchy title, but I'm going to break it down here. So as you guys know, I like to talk about finances and how to best manage your finances. And this is an important topic about living abroad that's not commonly talked about. And that is, what are your tax implications of living abroad? So you definitely want to stay tuned and watch the rest of this video because I'm going to break down exactly how much money you can save and keep in your pocket by actually living abroad and getting this opportunity to explore the world. So if you're someone that's ever thought about living abroad, or you're trying to make this decision right now, should I go and live in another foreign country for a couple of years and then come back potentially, or maybe stay there or explore more of the world, this is the video for you. And this is a decision that I had to make myself about 2 years ago. 2 years ago, I moved to Shanghai from San Francisco, California. And to be honest with you, it's been an amazing experience culturally, for myself personally, and also financially. I ended up making a great financial decision at the end of the day. And this is something that's gonna help me in the future. So let's talk about why living abroad might actually be a great financial decision. And this comes down really to leverage. There are 2 or 3 really important things to consider when looking at this as a financial decision. So let's put on our financial brain and analyze the upside of living abroad financially. The first upside is gonna be tax savings. The US has some of the highest income tax in the world. And there are many jurisdictions around the world that have less personal income tax. By living abroad, you can save yourself a lot of money. But before we jump into this, I have to remind you that I'm not a CPA, I'm not a certified tax advisor or anything of the sort. I'm just sharing my own personal experience and my own research. So please, before you make any decision, consult a professional. And of course, this is not any kind of financial advice. It's just me looking at the numbers, looking at my own personal situation, and sharing my understanding of the tax codes. The way you do this legally is through what's called the Foreign Earned Income Exclusion. So if you're a US citizen or green card holder, that means you're also a global taxpayer. You don't get to be part of the greatest nation on earth without having to pay something at the end of the day. And that is being a global taxpayer. That means anywhere in the world that you make money, not only do you have to pay the local government there, but you're also liable for paying taxes to the US government as well. Thus, the term global taxpayer. However, there is part of the tax code that can help you, and that's called the Foreign Earned Income Exclusion. So if you are a US citizen or green card holder and you're liable for paying US taxes for income earned abroad, you can actually deduct a certain amount from your income up to this Foreign Earned Income Exclusion, and then only pay tax to the US government beyond that amount. So in 2020, under this Foreign Earned Income Exclusion, as a single filer, you can exclude up to $107,600 from your income taxes. And if you're filing jointly, that means that you're married, you can exclude up to $215,200 for the year of 2020. In addition to this Foreign Earned Income Exclusion, you can also take the standard deductions, which is an additional $12,400 for single filers, and is an additional $18,650 for the head of household. That means if you take into account the Foreign Earned Income Exclusion plus the standard deduction, as a single filer, you can write off $120,000 from your income and up to $233,650 if you're filing jointly. So this exclusion is great, but what does it mean practically? It means that up to $120,000, you don't have to pay tax to the US government. You only have to pay tax to the government in which you earn that income. So if you're in Hong Kong or China, you only have to pay tax to those countries. You don't have to pay tax in addition to that to the US government. However, over these amounts, you still have to pay tax to the US government. And the amount of tax you're gonna pay is gonna be dependent on a number of factors, including how much you paid to the foreign government. So you can get something like tax credits to offset any additional income over those amounts for tax payments to the US government. One important note is this deduction still goes towards calculating your income bracket. That means even though you get to write off $120,000 in taxes, any additional income you earn over that is going to be taxed at that higher bracket. So you're not starting back from zero income. You're starting back from $120,000 and then adding from there to calculate your income tax bracket. So how do you qualify for this deduction? Of course, you have to live abroad, but there are actually 2 criteria that you have to satisfy, either or, that's going to qualify you for this exclusion. The first is the physical presence test, and this means that you have to spend at least 330 out of 365 days living in a foreign country. That means you can't spend less than 330 days living in 1 or more foreign countries. And this has a couple of restrictions as well. The first being that any travel to and from the US does not count towards your 330 days. That means if you're in China and you're flying to the US, even if you're over international waters, that's still not going to qualify you for a full day abroad. However, if you're traveling through the US from one foreign country to another foreign country, they do count that as a full day. So if you're going from China to Mexico and you're transiting through the US, that's not going to count against you. Now, the second test is called the Bona Fide residence test. And this really looks at your intentions and basically, are you establishing a domicile abroad? That means, is your intention to live abroad? Have you rented a place? Have you bought a home? Are you living with family abroad? And what are your intentions? Are you intending to go for a short trip, or are you staying there for an indefinite period of time? Did you establish a work visa? Do you have a work contract? This is a little bit more gray, but basically the IRS is trying to determine, are you intending to live abroad permanently? Generally, I'd say if you have a work visa, a work contract, and you're definitely making a lot of the income abroad, you shouldn't have any issue qualifying for this. But please, you definitely want to talk to your accountant and consult with them. Now, another benefit in addition to the foreign earned income exclusion is the foreign housing exclusion. So if you have to pay for housing abroad, be it rent, repairs, basic utilities, these are all things that can be also written off and basically increase the amount that you can exclude from your income tax. Now, to be thorough, the list of items that you can exclude include rent, utilities, repairs, leasing fees, insurance, and parking rental fees. What you can exclude are furniture, mortgage payments, domestic labor, telephone, or internet expenses. And you can't exclude anything that's deemed extravagant or lavish, meaning you can't go out and spend a bunch of money beyond what's reasonable and try and exclude that from your foreign earned income. So how do you take advantage of this practically? Well, at its core, you're basically looking at the difference between US taxes and whatever country you're living in. So if you're picking a country that has very low taxes, for example, Hong Kong, you're gonna basically be able to pocket the difference between the taxes in the US and Hong Kong. And that could be substantial. So let's take a look at some numbers. Let's assume your annual income is $107,600. This is the exact amount of the foreign earned exclusion. I just wanna use these numbers because it's gonna simplify things. You can always extrapolate this out and see what it's gonna be like for your personal circumstances. But let's say you're making $107,600, the exact amount for the foreign earned income exclusion. If you're living in San Francisco, California, you'd be liable for both state and federal income tax. That means on $107,600, your take-home salary would only be $71,256 after tax. That means you're paying $36,336 in tax every year, and your effective tax rate is basically 34%. Now, if you're living in a tax-free state like Nevada, your take-home is gonna be substantially higher. It's gonna be $81,288. That means you're gonna pay $26,312 in taxes, and your effective tax rate is 24%. That's already a great savings compared to San Francisco. You're paying 24% versus 34%. But let's say you live in a country like Hong Kong. In Hong Kong, your effective tax rate is only 12%, half of the tax-free state, Nevada. That means that your take-home is $94,519 of your $107,600. That means you're only paying $13,000 in taxes. So compared to California, you're paying 1/3 the original taxes. Compared to Las Vegas, you're paying only half the amount of taxes. So as you can see, living abroad actually makes a lot of sense financially if you can swing it. So not only can you save money living abroad by saving on taxes, but you can also take advantage of lower costs of living. San Francisco, California is one of the highest cost of living cities in the world. Compared to a lot of other places, the cost of a meal, the cost of housing is substantially higher. And if you can pick a country where the cost of living is much lower, you can again pocket the difference. And this could be a substantial amount of your income. For example, right now I live in Shanghai. This same apartment that I'm living in right now in San Francisco would probably cost 50 to 100% more every month. In terms of food, I probably have to pay 30 to 40% more in San Francisco. And in terms of cost of transportation, I can take a Didi, the equivalent of Uber here, for almost 1/3 or 1/4 of how much it costs in the US. So you add up those savings and you multiply on a monthly basis or a daily basis, and you could be saving tens of thousands of dollars a year by taking advantage of the lower cost of living in another city. And Shanghai is still a relatively expensive city compared to a lot of places in the world. If you lived in Thailand or somewhere else, you could be spending pennies on the dollar to live there compared to the US. Now this all sounds great, but you have to go about doing this the right way. The most important thing is that you want to limit your liabilities while not affecting your income. That means you don't want to go to a foreign country and actually take a pay cut and then also save money on taxes, because you're going to be making less money and also paying less money, but cumulatively you might actually be making less money compared to living in the US. So you have to take that into account. And the best way to do that is to get a job with an international firm. International companies are going to have more or less standard amounts of pay globally. And that, if you find a country where the cost of living is lower, may work in your favor. That means if you can get US pay in Thailand, US pay in Hong Kong, US pay in China, you're effectively arbitraging the higher pay that you get from companies in the US with a lower cost of living that you get around Asia. A really effective way to do this is to look inside your current company and see if there's an opportunity to work abroad. Maybe they need help setting up new offices in Asia. Maybe they have some kind of foreign exchange program where you can work abroad, still earn the same paycheck, but pay the lower cost of living. For a lot of international companies, they have a presence all around the world, and they might even see that as an asset, giving you a little bit of experience further down the supply chain, or working internationally and understanding other markets. Now that we've talked about the financial aspects of living abroad and working abroad and being an expat, let's talk a little bit about the non-financial benefits. The first thing that you have to realize is that your friends, your current job, and your family are still gonna be there when you come back. You can spend 1 or 2 years, live abroad, and come back and go back to your old life if that's what you want. And there's nothing wrong with that, but I do believe in seeing more of the world. Not only do you get to see how other people think and behave, understand other markets, but also, for me, it really satisfies the sense of adventure that I have, this desire to go and explore. I think a lot of this cannot be satisfied by being in an office 10 to 12 hours a day. For me, there's nothing like taking a flight and staying a few days in a foreign country, taking in their cuisine, taking in the culture, just walking around and seeing how the rest of the world works. For me, that's really a priceless experience. And at the end of the day, it's really how you choose to spend your time on this earth. Do you want to spend it being around things that you're familiar with? Or do you want to broaden your horizons a little bit and see what else is out there? You know, in the States, the most common places to go are places like Las Vegas and New York. But if you have the chance to travel abroad, you can go to places like Macau, which is like Las Vegas, but on a much grander scale, with many more resorts, bigger casinos, higher stakes gambling. It's definitely a sight to behold. And outside of the US, there are some places that are desperately, desperately pretty, like Indonesia or Vietnam. You can be one with nature and explore different seas, different mountains, and different trees that you have never seen before. It's really a great, great experience. And I know I focused a lot on Asia in this video, but really you could apply these concepts for anywhere else in the world. There's plenty of places in Europe or elsewhere where you can leverage a similar opportunity and arrangement and immerse yourself in those cultures while you're saving money as well. Especially if you're young and you have nothing to lose, why not go live somewhere else for a couple of years, fall in love, learn a foreign language, try some new cuisine, open your mind and explore what's out there, and then go back and settle down afterwards. Or maybe you'll fall in love with someone along your travels. At the end of the day, money is important, but it's also important to optimize the amount of time you have on Earth. And I know for me, if I hadn't traveled as much or I didn't take this opportunity to live in Shanghai, I just would be missing out on so many great stories that I've accumulated over the years. And for me, this is definitely a price worth paying. So not only have I saved money on taxes, but I also got an opportunity to see what else is out there in the world. And that's the most important thing for me. If you too are interested in this type of content and you enjoyed this video, please like this video and subscribe to the channel. I'm gonna be trying to post 2 to 3 videos a week, and I'd love to hear what you guys would like to hear. If you like this content and enjoy the video, please like the video and subscribe to the channel. I'm gonna try and produce more content like this in the future. Please let me know your thoughts and what else you'd like me to talk about on video, and I'd be happy to share my experience and engage with you guys more. Thanks for watching. Have a great day. Live life, enjoy it, explore. I wish you the best.